Everybody, I hope you're doing well as we quickly wrap up here in January, almost through the month of January already. Been a fast start to the year. Lots going on. Wanted to dive into asset allocation. I put out a piece earlier. I'll link to it in this email so you can have a look if you missed it. But the importance of asset allocation, we've seen that definitely over the last year or so. Previous to that, for numerous years, you put in the U.S. markets, you put in those big tech companies that we've talked about. Overexposure there was a good thing as they continue to rally. Not so much over the last year and a half as we've seen a lot of the other global markets and other asset classes outperform, gold being one of them. Here's the long-term chart just to give you some perspective. Yes, it's been very hot over the last couple of years, gold, silver, all the metals, the coppers, but you can see, go back to 1980 when it peaked, really hadn't done anything and just now hitting new highs 46 years later. So a bit of not the best investment over those 46 years until the last 18 months or so. But doesn't mean you shouldn't have a piece or some exposure anyway, even if it's not directly in the metals themselves. Canadian market has exposure to precious metals, so making sure you have some allocation to these different asset classes. Same thing here, looking at, as mentioned, the U.S. market outperforming previous to the last year and a half or so. Emerging markets, European stocks since the beginning of 2025, hugely outperforming the S&P 500. And a lot of that driven by that underperformance of those big tech companies that were doing so much of the growth previous to 2025. So having allocations into European stocks, into emerging markets, making sure those allocations levels stay where they're supposed to be in a properly allocated portfolio is important. Speaking of those Mag 7 stocks, you can see this chart a bit convoluted here, but that black being the price level of those Mag 7 stocks. So it has risen, or the price of them combined have risen over the last few years, but not to the same extent that a lot of the other global markets have. You can see on that bottom chart, it's an index that shows whether something is oversold at that top red line, at the bottom green line, or overbought at that top red line there. And you can see as it dips below that green line on this chart showing that it's underperformed so much, it's currently oversold those Mag 7 stocks as a whole compared to the rest of the markets. Something to keep in mind of, and remember to rebalance automatically in your portfolios. So anything that has underperformed will get added to as you trim for your winners a little bit more, rebalancing the risk level in your portfolios. Turning to the political set, don't want to dive too deep here. A lot going on, as you are all probably aware, with Greenland and different deals, trade deals around the globe, and of course all the speeches in Davos. But just showing that the markets like a little bit of gridlock in the U.S. Congress. So when there is a majority, but it's a very small majority, markets seem to outperform. You can see that average of a 16% return, with the median at almost 22%, and 81% of the time markets are moving higher when the majority isn't 20 seats or more. And of course, we move into midterm elections here. So another piece to pull out of this is that markets prefer when the Congress is split between the House and the Senate. So we'll see what happens in midterms. But even if it's split, or if it's a small majority that continues, markets should benefit from that historically. So January, where are we going the rest of the year? January is a barometer. We're of course not quite finished January, but things are looking positive at the moment. So you can see here when January is 2% or higher, we continue to move higher from that. A positive month, the average being 12.2 at 12.3 if it's over 2%, versus the average year of 8.2. And you can see here, if we get a negative January, markets are still generally end positive, just nowhere near as high. So keep that in mind. We're looking positive at the moment, but things, as we've seen, been very volatile. A few interesting charts for you. SpaceX has been on the minds of many. You can see how much this has risen over time. You can see we've got a long time horizon here when SpaceX was just a bit of a dream in Elon's mind to where we are now with an $800 billion market value. That would rank it 13th in the world, I believe, if it was publicly traded. You can see just how much it's risen on the hype over the last few years here. So keep that in mind as they continue to push and raise money. One last thing that some of you have probably heard of, but played out again seemingly with the Greenland talks, is this taco trade. I'm not quite sure who coined it, but the standing for Trump always chickens out is a way to play the markets. Of course, it's not always going to work. There is no real way to play the markets, but you have a long-term strategy, and it might help even more for the emotional mindset that Trump comes out with all some would say outlandish demands on certain things, and as a negotiation tactic, bringing it back to more reasonable terms and getting what he wants at the end. The last occurrence of this, of course, being Greenland markets did not like that on Tuesday when they opened, and then stepping back to say that he would not take it with force, and there was an agreement in place. All of a sudden, the markets are back to nearly all-time highs a few days later. So funny, if you haven't heard that, that's what people are referring to when they talk about the taco trade. So that's it for us and January. I hope everybody has a great rest of the month, and we'll be back with you in a few weeks with more charts. As always, any questions, concerns, feel free to reach out, book a meeting, give us a call, send us an email. We're happy to chat. Take care, everybody.